Happy Thursday, everyone. Today is a very bloody day, and today's episode is going to be talking about some stuff that has happened last night, primarily around the Middle East, because it is definitely sending some angry shivers up and down people's spine that are in the market and also not in the market as well, too. The market itself is very much acting in a very damaging, pissy way, pretty much throwing a hissy fit right now, because the last couple days have been very optimistic. And if you've been following along on my videos here, I'm completely free to subscribe. Please do so if you want to see more content from me, and also drop a like, which definitely supports me and the channel. Completely entirely free. It takes literally 1 second. If you enjoy my content, definitely show support. But I basically pretty much been talking about how the last couple days, is it nothing more than just kind of really a bull trap? And are we going to pretty much retest the lows that we had basically earlier, March 30th, earlier this week? Sorry. To be honest, all the weeks are now just kind of really seeming like one big blur. And I'm not the only one that's experiencing a blur of tunnel vision. Legitimately, last week seems like this week. 2 weeks ago seems like 1 week ago. It's utterly crazy right now in the market. But going back to very much any dip in the market, Liberation Day, you basically pretty much see that we did hit a very, much of a bottom, and then we bounced back up, and then we went back down, then we bounced up, then we started to pull back, went up a little more, and then we ended up going back down. And, I mean, no pullback is ever the same. You go back even to more buy the dip opportunities, really August of 2024. That was the Japan carry trade. Obviously, we had some days where we dipped all the way down. We pushed up a little bit. We pulled back. And a lot of people are really wondering, hey, is this just going to be kind of a small little pullback? Or is this something really different? And to be honest, this really could be something different, because last night, President Trump ended up speaking in front of the nation. He was live on the White House YouTube channel, also mainstream media as well, too. A lot of other YouTubers that cover geopolitical events were streaming as well, too. I watched the entire speech. It was roughly 28-something minutes, a little bit under half an hour. And it was really like nothing bullish right now came out of that speech. Pretty much what he stated is that we're going to be continuing operations for the next couple weeks. He reminded everyone that basically pretty much World War I ended up lasting many years. World War II ended up lasting many years. And this war is going to be very much over relatively quick, in which I really do hope so. But the market right now, today, is definitely just throwing a hissy fit. The market is definitely not looking to the forward future. The market is very much taking what he said as face value. And what he said as face value is that, hey, we really don't get any oil from the Strait of Hormuz. Oh man, I just butchered that word. Please, I butcher a lot of words, especially on YouTube recording. So please, don't take that to heart. But the strait in the Middle East, where oil comes out of, he's basically saying to other nations, hey, if you want the oil, you're gonna have to go and get it. You're gonna be putting in the legwork, and the U.S. is pretty much going to be done with operations within the next couple of weeks. Ironically, that's going to be probably near the beginning of May, and that is around the same time that we pretty much started to really recover from Liberation Day last year. Once again, no crash is ever the same in the market. It's always different. But, I mean, who would have ever thought we would have a 2025 2.0 type of a year? Does that mean we're going to have a nasty end of the year? maybe not. And that is definitely one thing that's kind of really holding me from really doing a lot of heavy buying in the market. I've been buying for the last couple months. I've been posting my buys, my trades publicly on this channel. So if you've been following me, you definitely see what I'm doing. You see my ideas as a long-term investor and a trader in the market. But it really keeps you in check because anything can happen. We could very much recover and we could very much have a great summer like last year. And then we can have a crappy, end of the year after midterms like we did theoretically last year. It's a little crazy. But what is happening right now is we have oil on the surge, which once again, oil is a geopolitical type of an issue. And the fact that we are not in a full-blown de-escalation right now, if anything, President Trump even said we are escalating right now because in his mind, he is seeing that, hey, the war is going to be theoretically over on the U.S. behalf in the next couple of weeks. Therefore, we got to do whatever we need to do to really finish wrapping up some stuff. Oil is definitely on the surge. The major indexes are definitely taking a pullback from yesterday. Pretty much all of yesterday's gains have been wiped out on the major index and SPY, on the Qs, on the IWM, on NASDAQ. We go down to the Dow Jones. Yep, even on the Dow. Even on Bitcoin. The VIX is definitely very much higher than yesterday. And seeing oil at these prices, it's really giving a lot of people hibbity-jibbities. Tesla. I really have not been talking about Tesla too much on this channel. I have been in and out of Tesla over the years. I did not catch the gigantic surge of Tesla from 2019 during 2020-21. I was in the market during Rona 2020-21, but I was very much in other companies beside Tesla. But I started to really trade Tesla back in 2022, 23, 24. And then ever since the election of when Tesla utterly went bananas, I basically pretty much stayed away from it. But Tesla is a very risk-on asset. And if you want to know if the market is really risk-on or not, there's many, many indicators out there. One, you can just look at the friggin' major indexes, but also you can really look at Tesla too. And I got to really be talking about Tesla more a little bit, but Tesla is really just very in a bearish cycle now, which means, hey, the market is just overly bearish. Obviously, I talk about Bitcoin also as well. Many other different assets. Of course, JPM very much fearful in the market when it comes to a possible recession. The top bank in the world is definitely very much trailing down. That should speak very loudly. But as for my positions on this YouTube channel and also my public YouTube profile here, my positions are very risk-on. I do primarily cover risk-on assets, but one thing that I have really been focusing on is how even if we do recover from the Iran war and oil goes down, we still have other problems in the market. The problems in the market isn't just oil, and it's not just the Iran war. It's very much that there is an AI fear. A couple months ago, what caused the market to go down? AI fears, software apocalypse. So right now, the bearish sentiment around AI and software companies, it's not there anymore. The bearish sentiment is around oil in the Middle East. Once the Middle East goes away in the next couple of weeks, are we going to recover in the market? This is where reality really sets in. And this is where a lot of Wall Streeters are now talking about, hey, 2026 could very well be a 2022, but it could be inverse in the sense that you have companies growing their EPS, growing their revenue, but their stock price is going down. 2022, you had the opposite. You had pretty much, or the opposite in the sense. So 2022, you had stocks going down, but you had a declining of EPS and a declining of revenue. However, if theoretically 2026 is very much the opposite in the sense of accelerating revenue and a declining market, you may be thinking, how is that possible? It's actually very simple. It means that people are so scared shitless, they don't really want to buy stocks, and they are missing great opportunities. Phenomenal opportunities. Generational buying opportunities. So for me personally, I didn't buy any more stocks today. SoFi actually did dip here below 15 bucks. I did buy some SoFi a couple days ago below 15 bucks. But I'm just really sitting tight for the time being because tomorrow the market's going to be closed. And a lot of times now, people do not want to hold risk on assets, especially over the weekend, especially over pretty much a holiday weekend. So next week, if we very much open in the red, this is going to be carrying over into all of next week. If we open into the green next week, we could very much have an inverse week once again where pretty much we have a couple green days and then we sell off in the later week like we've pretty much been. But there are a lot of Wall Streeters now pretty much talking about how 2026, it's going to be like a 2022 where we basically pretty much just are in a downward cycle and we go up a little bit and then we go back down. We go up a little bit, we go back down. Companies, their stock prices don't really go anywhere necessarily. And it's going to be a great buying opportunity. What am I personally doing? I'm buying the entire way. The entire way. But here's the reality too. You got to be finding great companies. And on the other side of stuff too, you got to be finding disruptor companies that are very much hitting a industry. SoFi is very much my bread and butter disruptor in the banking sector. AMD, very much a disruptor company in the semi, is going to be eating away Nvidia's market share. Adobe is very much a risk play for me, a software. Can Adobe never recover to the level that it's going to once be at? Sure. Do I have really good forward-looking optimism on Adobe? Absolutely. Otherwise, I wouldn't be risking my capital. But this year could very well turn out to be a very bearish sentiment of a year. It's pretty incredible. We have a lot of stuff going on right now, unlike we did last year. Last year during Liberation Day, we only really had the tariffs. The labor market really wasn't showing like that many big signs of weakening. Now we're getting a tremendous amount of like data all over the place, and tomorrow we're pretty much going to be getting even more data, and the data is going to be carrying over to next week. The data that we're going to be getting tomorrow is the unemployment rate. I will be making a video tomorrow, even though that the market is closed. Happy early Good Friday. But we did get initial jobless claims, obviously a little bit below expectation. This is probably going to be revised once again. And the unemployment rate, who knows where it may be tomorrow. And then on the flip side, next week, we're going to be getting a bunch of inflation data, which is going to be showing high oil prices, and it's going to be spooking the market even more. So we have a lot of problems going on in 2026 that a lot of people probably didn't really foresee. And it's really remarkable because so many friggin' people are or were extremely bullish on this year. I said back in December, we're going to be having a really bad January and earnings are going to get us out of the slump. However, maybe earnings coming up for Q1 of 2025, hence SoFi's earnings. Oh, wow. SoFi launches banking service for business. Go figure, as I'm recording this video. Probably going to be talking about that tomorrow then. SoFi's earnings, AMD, Adobe, Hood, Palantir, Meta, PayPal, Oracle, and definitely many, many others' earnings. Maybe the new earnings that are going to be coming out, maybe that's going to get us out of this slump. I'm going to go ahead and wrap up this video here for today because this is pretty much all I really want to talk about. Tomorrow, probably going to be talking about definitely the data. Definitely do want to talk more about SoFi, but I want to keep these videos relatively short. I respect your guys' time so much. And as always, do your due diligence. Don't let fearful events shake you out of the market. If you've been following me on my public profile on this YouTube channel, go back to my videos 3 months ago. All my positions on this channel were very much in the green. My SoFi position was over 120%, but my total cost basis on SoFi was like $4,900. I have been increasing all of my cost basis on my positions. Why? Because I'm forward thinking. Why? Is because once the market goes risk on again, these great companies, baby, gonna make me a nice pretty penny. On a closing note, don't let the haters, the doubters, don't let them shake you out of your future great growing opportunities in life. I will see you all tomorrow on a brand new episode. Depending what the market does later today, I may actually be buying a little bit more stock here. But I really do hope everyone is having a great time. Just remember why you buy stock and forward look, because the sentiment right now around these companies, AMD, SoFi, Adobe, Hood, Palantir, Meta, PayPal, Oracle, if you go on social media, it is like a funeral. That is when you buy. That is when you want to be excited. That is going to make you life-changing money. Take it easy, everyone. Later.